Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two strong buy ETFs with over 20% growth potential. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today, we're taking a look at two growth-focused ETFs that have an overall strong buy consensus from Wall Street and price targets with an upside of over 20%. Now, of course, Wall Street analysts don't actually give ratings on ETFs, but what TipRanks is able to do is look at the individual ratings on all of the holdings within the ETF and give it a consensus rating based off of that. We found today's two ETFs using the ETF screener over on TipRanks. Found right under the research tools section here, we focused in on a low expense ratio with a double-digit price target upside, and I added in some large or mega cap filters under advanced filters here to narrow down our list down below. So today we're going to take a quick look at these ETFs, what their focus is and their top holdings, plus how those Wall Street analyst ratings tally up. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also download the TipRanks mobile app using the links in the description down below to stay up to date on all the latest investment news and access your favorite research tools on the go. Let's get right into our two strong buy ETFs. We're going to start things off with a Vanguard ETF. They are actually one of the world's second largest ETF providers, and we're going to be looking at the Vanguard Growth ETF. It trades under the ticker VUG, currently priced around $353. Over the past year, the ETF has climbed 28%, and in the last 3 months is up 5.3%. They have a low expense ratio at 0.04%. As the name suggests, this ETF is focused on growth stocks. They seek to track the performance of the CRSP US Large Cap Index, which is designed to accurately represent the large cap growth segment of the US equity market and deliver low turnover. The fund remains fully invested and employs a passively managed full replication strategy. The VUG ETF has 190 current holdings and total assets of over $130 billion. And they are heavily weighted in their top 10 stocks, with 60% being allocated towards those. When we look at those top holdings, you'll probably recognize every company on the list. Big tech names like Microsoft, Apple, Nvidia, Amazon, Meta Platforms, Google, Tesla, and Visa, and Eli Lilly. Looking down below, it is 100% focused on the United States, with a large weighting in technology at 50%, followed by communication services, consumer cyclical, and healthcare. Overall, it has a weighted average SMART score of 8 for an outperform. And based on those 190 holdings, the ETF does pay out a modest dividend as well. The most recent quarterly dividend came in at 46 cents per share for a dividend yield of 0.53%. Now, that yield does fluctuate based on the underlying holdings paying out. As I said at the start, the ETF does come in as a strong buy overall based on those underlying 190 holdings. The average price target, which is weighted based on the size of position within the ETF, comes in at $436 for an upside potential of 23.5%. Down below, we can see which stocks within have the highest upside potential and which ones have the highest downside. Under the highest upside, we have companies like Symbotic, Snowflake, and CrowdStrike, and biggest downside would be Palantir, Aon, and Waters. Our second ETF today is another one with a focus on growth stocks, that is the Schwab US Large Cap Growth ETF. It trades under the ticker SCHG and is priced at $98 per share, having climbed 31% over the past year and gaining 5.9% in the last 3 months. It also has a very low expense ratio at 0.04%. This ETF is similar to the first in that it follows a lot of large cap growth stocks, but this one does track a different index. They seek to track the performance of the Dow Jones US Large Cap Growth Total Stock Market Index, and that's designed to measure the performance of large cap US equity securities that are classified as growth based on a multi-factor analysis. They say they offer a straightforward, low-cost fund offering potential tax efficiency, and that it can serve as part of a core of a diversified portfolio. Compared to our first ETF today, the Schwab US Large Cap Growth ETF does have a smaller amount of total assets at about $30 billion, but a higher number of holdings within at 249 current holdings. But they do have a similar concentration in those top 10 holdings at 59%, and you're going to recognize a lot of the names there with Apple, Microsoft, Nvidia, Amazon, Meta, Google, Eli Lilly, Broadcom, and Tesla. So we have one different in the top 10. Looking down below, we also have an average weighted SMART score of 8, 100% focus in the United States, and fairly similar top sectors here. 49% technology, they're followed by consumer cyclical, and then communication services and healthcare. And this ETF does also pay out a modest dividend, with their latest quarterly dividend being 11 cents per share for a dividend yield of 0.43%. And of course, based on those underlying holdings, the ETF does come in overall as a strong buy. That is based on 207 stocks being rated a buy, 40 a hold, and 2 a sell. The average price target of 117 would be an upside potential of about 22.6%. And we do have some different stocks here as far as the highest upside or downside potential. On the highest upside potential in the top spots are Astera Labs, Plug Power, and Five9. Biggest downside being Ubiquity Networks, Credit Acceptance, and Palantir. So there we have two strong buy ETFs, both with a focus on large cap growth companies. Let me know your thoughts on these two and what are some of your other favorite ETFs. I know there's a lot of great options out there, and I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock or ETF, so please make sure you're always sticking to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.